Hi, guys. Welcome to the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with John Zeratsky of Character.vc. This is a venture fund that helps its startups run effective design sprints, something that John developed while he was working at Google Ventures previous to Character.vc. So we get into exactly how to run a design sprint to build better products. This should be pretty valuable for you. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. So this is really going to help you prepare to raise capital. To get instant access, click the link in the first comment. While you're there, please leave us a nice comment, what you like about this episode or about this show in general. Very much appreciated. And last but not least, if you enjoy this conversation and think someone else would too, please share it with them. And hit that subscribe button to get all our latest episodes. Thank you, and sit back and enjoy the chat with John.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have John Zeratsky of Character VC, based in Milwaukee, but coming to us from Santa Monica today. How's it going?
It's going well. I decided to take a bit of a break from the Wisconsin winter and come to Los Angeles with my wife. And it's been great. We were here for the Super Bowl, which was pretty exciting.
Did you go to the Super Bowl?
No. I just mean we were in town while it was happening, with LA in the Super Bowl, winning the Super Bowl in LA. So it was pretty exciting.
Very cool. Well, talk about Character VC. What is Character VC?
Character is a new VC firm. We started last year. We invest in startups at the seed stage. And then after investing, we use the design sprint method that we created at Google Ventures to really get involved and work hand in hand with founders and help them find and expand product market fit.
Okay, so let's dig into that a little bit. And so let's start with the types of companies you're investing in. I'm assuming they're pretty early stage. They probably have a basic product or MVP out. I mean, is that the right time to engage a venture firm like you?
Yeah, so we're making most of our first investments in seed rounds. So, the terminology has shifted a bit over the years, but usually the second round of funding that a company is raising when, like you said, there's a basic product, usually haven't found product market fit yet, or maybe they have with some really small early set of customers, but they need to dramatically expand it in order to grow the business. But one thing we've been finding is that we can be a really good thought partner for founders who are much earlier than that. We've had several founders, either people that we know from previous work with their companies at Google Ventures or from just people who have been referred to us, where we'll basically have a series of calls with them over the course of a couple of months as they're exploring opportunities, as they're sort of testing out hypotheses, and we'll actually coach them through the sprint process. So we won't be there with them like we would be once we make an investment, but kind of help them figure out what are you trying to learn here? Like, what's the big assumption that you need to check? And then what's an experiment that you can run to test that, rather than building toward a vision, where it seems good on paper and you might, get some head nods from some customers, but then, it's 3 to 6 months before if you've actually got something. So basically, I think the earlier the better for founders to reach out with us. But yeah, we're making our investments usually in a seed round.
Yeah, interesting. Yeah, I could have used you when I started Founder Suite several years ago. I had a big, wild vision of a whole suite of tools for founders. Sounds good on paper, but we built like 5 different tools in our MVP, and none of them were very good or very useful. And, ultimately kind of killed most of them off and focused in on the fundraising piece, which has turned out to be a good, successful category to expand. But yeah, I get it. We made all the mistakes the hard way. Expensive.
We mostly want to help founders make all the same mistakes, but much more quickly.
Okay. Well, so let's get into what is the design sprint concept, kind of lay it out on a timeline or whatever methodology you kind of do. Yeah.
Sure. So the design sprint is a 5-day process that teams can use to basically answer any big question that they have. It tends to be questions that kind of exist at the customer layer. So it's about, will people understand this? Do people want this? Will they be able to use it? Does it solve their problem? But when a company is, working on that V1, or they're trying to expand from an initial set of customers to a larger set, we'll run a sprint. We'll identify kind of the goal and some of the big unknowns on the first day of the sprint. Then we'll generate some possible solutions. So we'll actually have the whole team involved, sketching on paper, putting down, essentially making their bets, saying like, hey, I think the landing page should look like this, or I think the product should have these features, or whatever. Then we go through a structured decision-making process to try to eliminate as much of the usual biases as possible, identify which of those solutions seem the most promising. That's what we do typically on Wednesday of a 5-day sprint. Then we build a rapid prototype. So these are typically clickable mock-ups of some kind that we can then, on Friday of the sprint week, the last day of the sprint, we can put in front of real customers. So we go out and we recruit 5 customers who fit a certain profile that the team is targeting. And again, it's all part of this hypothesis. It's basically, we think if we build this for these people, it's going to work. So we try that out on Friday. We put it in front of them. We have a conversation. It's a much more detailed and more valuable conversation than a typical customer development call, because they're actually looking at a prototype, reacting to a prototype. We try to make that prototype as realistic as possible, even though it doesn't work or really do anything in most cases. But by the end of the week, then we've got a really good sense of whether we were right or wrong about our hypotheses. And that sort of serves as the input into another loop, another kind of lap around the process the next week.
Interesting. And so maybe summarize that. I think it's all good. Maybe summarize. So Monday is kind of sketching out maybe do Monday, Tuesday, Wednesday, Thursday, Friday in summary form.
Sure. Yeah. So Monday, we map out the problem.
Yep.
Tuesday, we sketch possible solutions.
Yep.
Wednesday, we decide which of those solutions are most promising. Thursday, we build a rapid prototype, a realistic prototype of the most promising solutions. Friday, we test that prototype with target customers.
Yeah. Awesome. That's a great summary. And then do you repeat the cycle next week based on what you learned, or kind of how's it go from there? Mm-hmm.
Usually, it's sort of like there's like this burst of energy that usually tapers off or does sort of a crossfade into other, designer development cycles after 2 to 3 weeks. So it's quite rare that after one sprint you've figured out everything you need to know. But usually you have some things that you're more sure about, and then you have some new questions. And so most teams run kind of a burst of 2 or 3 sprints. And then they kind of shift more into a production-oriented mindset of, okay, like we're pretty confident that this is going to work. Like, let's start building it. Let's start, building out all the mocks for all the different screens and flows and everything. But doing it from a position of real clarity and confidence, instead of doing it based on just a vision that exists in the founder's head.
That's good. Is this something that was already in place at Google Ventures, or something you developed there? I know your history is at Google Ventures, right? So maybe talk about the history of this.
Yeah. So I spent about 6.5 years at Google Ventures, and I joined in 2011. So GV started in 2009. I joined in 2011. And at that time, it was quite rare for a VC firm to have a real program for supporting portfolio companies. It was around the time that Andreessen was kind of starting to build their whole program. You had isolated pockets of it, but most VCs were kind of still stuck in this mode of, well, we're going to give you some advice and make some introductions and, try to be helpful and support you. But GV wanted to do something that would be very differentiated in the market. They wanted to really present sort of a unique pitch to founders. And so the way that they did that was brought a bunch of people from Google, engineers, marketers, and designers from Google, made them full full-time partners at GV, but with the purpose of and the responsibility for working with the portfolio of companies post-investment. And when I joined, I was one of the first people to join in that role, and the firm was pretty small. The portfolio was pretty small. And so initially I just did what I had always done as a designer, which was, go inside a company and figure out what was going on and try to help them out. But we discovered very quickly that was not going to scale. So started thinking about how can we continue to help companies with design, but do it in a really scalable way, and a way that's really rooted in the key questions that they have and the things that they need to figure out as a business. So around that time, we got in touch with Jake Knapp, who was a friend of ours, and he had been at Google. He had created this thing called the Design Sprint at Google, which sort of in its nascent form was essentially a brainstorming workshop with a hackathon. So come up with some ideas, build some stuff. And we recruited Jake to join us at GV. And then basically starting right away in 2012, that became our engagement model for working with our portfolio, was running these sprints. So over the course of the next 6 years, we ran about 150 of those design sprints with portfolio companies, including Slack, 23andMe, Blue Bottle Coffee, Gusto, Uber, Flatiron Health. And not only, did a lot of interesting work with those companies, but we were able to iterate and improve the process itself. So it was created by Jake at Google, and then really sort of refined and evolved into what it is today via our experiences working with early stage startups at GV.
That's cool. Well, what a great background. Okay, so then let's get to Character VC. Where the idea to come up with your own venture fund, a splinter off from Google Ventures? Is it just to have a piece of the carry and better economics, or I don't know.
Well, we did have a piece of the carry at GV, so that like I said, we were partners, which was great. I mean, we really truly felt like we were sort of part of the team. We weren't just this like add-on thing, which was great. But I think there's sort of a me answer and there's a market answer. And I'll start with the me answer, which is that, I'm a designer. I love working with startup teams. I've been doing that my whole career, helping on kind of those really formative questions of what are we building? Who is it for? How are we going to reach those customers, get them signed up, make sure that the product is doing what it needs to do to help those customers reach their goals. And I did that as an individual contributor. I was part of a startup that was acquired by Google. I did that inside of Google. I was part of the team that designed and launched the YouTube channels platform, and then the experience at GV that we talked about. And after leaving GV, I sort of dabbled in consulting and advising and a bunch of stuff like that. But basically, I realized that the way that I liked to work best, the best sort of business model and platform for the work that I like to do with startups was actually as an investor. There's just a different relationship between investor and founder. It's long-term. Your incentives are aligned. When things go well, everybody wins. That's different than doing that work as a consultant or as an advisor. So I sort of had this, for me, based on the experience at GV, I was like, this is the right way to do this work. And so was interested in getting back to it. The sort of the market answer is that, when I first decided to team up with Eli Blee-Goldman, who's the other general partner, my co-founder at the firm, we spent a lot of time looking at the market of VC and all the new seed funds that had come out in the last 10 years. And we started to kind of get the sense that we were seeing double, because every time we would go to a website for a seed fund, it was like the same, like they were saying the same things. You know, it was almost like you could copy and paste the text between the sites. It was like, we'll be your trusted partner from day one. You know, we'll be there when you need us. You know, when you call late at night, we'll pick up the phone. We've been in your shoes, so we understand what it's like. And those are all really good and valuable things. And I'm friends with and enjoy co-investing with lots of those funds, and they all mean it and they deliver on it. But we just saw this opportunity. We're like, hey, nobody is delivering within the seed space. Nobody is delivering the kind of real hands-on support that we know we're capable of doing because of the design sprint. And, even though you see a lot of new models, you see things like, new accelerators from OnDeck or Hyper. We weren't seeing a lot of investors who really had a clear way of tapping into kind of the core risks and the core challenges of building a business, which was product and go to market. And so we just saw an opportunity that was like, hey, we've got this thing that could help founders with kind of their most critical issues. And as you know, like the best companies have these competitive fundraising situations where every investor is trying to earn the ability to invest. And so we just saw a really clear opportunity to have, this unique strategy based on the design sprint for not only supporting companies, but for kind of earning access to invest in the first place.
Access, sure. Okay, let's we'll flip it around now. Talk about raising your fund. This was your first time fund. I mean, you've been VC before, right? But was it hard? Was it easy? Is there a lot of money out there floating around for first-time fund managers? Was your, I think your strategy is differentiated. I hear a lot of these pitches and haven't heard anything like this. So maybe talk about that. Open question. Yeah. How was raising money?
The answer to all those questions is yes. It was hard at times. It was easy at times. There is a lot of money out there. But it was interesting. Neither Eli
Let's start with like how you approached it. Did you have a lot of contacts from GV days, or did you have to build an LP base? Maybe start with that. Yeah,
we did. We had a lot of contacts, but we had to learn which ones were useful. We had to really understand the landscape of limited partners who invest in venture and figure out, who are the ones who are looking for this kind of exposure versus the ones who are just taking a meeting because we know them or they're kind of curious about what we're doing. And I think that qualification was sort of the first aha moment is figuring out how to know, A, is somebody looking for this kind of exposure, and B, are they making allocations right now? Are they making decisions to put money into these types of funds right now?
Yeah.
So that was huge. We got some great advice early on that the best thing that we could do was try to disqualify people as quickly as possible because we had hundreds and hundreds of meetings. I don't even know how many exactly, but time becomes really the constraint. And so being able to get to those clear no's, not because they didn't like us or whatever, but just because it's not a fit for what they're looking for was really important. And then I think a couple other.
Is that just simply asking them, hey, are you looking for this type of deal and are you allocating?
Yeah, exactly. I mean, before we were on a call with somebody, and we did it all over Zoom because we were raising, during the pandemic. Yeah. So very, very few in-person meetings. But yeah, so before getting on a call, we would try to suss out, from looking at them online, whatever we could find, like, have they invested in funds before? Are they actively investing? And then, we would just ask them. We would say, we would ask them about what types of funds they're investing in now, the funds that they've invested in the past, whether they're looking to make new allocations in venture, things like that. Yeah, being pretty straightforward about it because they don't want to waste their time either.
Yeah,
there were a couple other interesting lessons for us. I think one was learning the value of the true believers, the people that we already knew that maybe were execs that we had worked with at Google or YouTube. Maybe they were founders or early team members of GV portfolio companies, but people who already knew the value of the design sprint, people who had been in the room, had been in design sprints with us before. And so, when we could talk to them and they could immediately understand, like, yeah, I've done this process. It really moved the needle for our company. Getting a lot of those people in early was really a great momentum builder, as well as social proof to be able to say, hey, we've got this number of people already committed, this number of dollars already committed. And then the other thing that was, I think, really illuminating was understanding the product that we're selling to LPs and understanding it in the unique context of the market of LPs. And specifically what that meant for us was that we were able to exercise a bit of geo arbitrage. So we're based in Milwaukee, Wisconsin. I lived in San Francisco for about 8 years, so know a ton of people there. But for the average, high net worth individual in Wisconsin, or a family office, or even corporation, we have a large health system as one of our LPs. They don't necessarily have good ways of getting access to the national venture landscape. They don't have necessarily ways of getting into funds that are going to be investing in San Francisco or New York. And so to be able to sort of exercise this arbitrage of, we can sit down with you and we can have a coffee and we can come over to your backyard and you can build a fire because it's winter and COVID and we don't want to meet inside. And then you're going to get access to companies that are, ex Google, ex Facebook, whatever engineers who are leaving and starting things. That became sort of our kind of unique access, our unique product that we were able to sell. And I think it would be different for everybody, but I think there's probably a kind of a transferable lesson in terms of like, what are sort of those unique differences between what you have and what your LPs or your investors are looking for that you can leverage.
That's great. Yeah, no, that totally makes sense. Quickly on the true believers, I think I saw somewhere that some of your LPs are probably founders or angels from Uber and Slack and, so was that your starting point? Like, let's get some of these folks who made money when Slack went public and get them in? Yeah, it
was. I wish that it was our starting point. To be honest, the beginning of our fundraise was pretty messy. We just didn't know what we didn't know, and so we spent a lot of time bouncing off of walls and having conversations that didn't really go anywhere. But I would say, within probably a couple months into the process, we did have sort of a light bulb moment around those founders, those early employees, those execs who'd had liquidity or who had been at a big tech company for a long time and were true believers, had experienced either working directly with us or knew about the design sprint, or just had some relationship with GV. And those became kind of some of our early commitments.
Yeah, great. How long did the whole process take to raise the fund?
It took approximately a year. Okay. And I say it that way because we started in the fall of 2020. And that was, for anybody in the US in the fall of 2020, you may recall, it was a pretty distracting time to try to do anything. There was the election, a lot of anxiety and difficulties related to COVID. And so we started in the fall of 2020, but it became pretty clear that not much was going to happen until at least the end of the year. So we just we played it very soft for those first couple of months and just tried to reconnect with people and get on people's radar, and then really started, for all intents and purposes, I would say in January of 2021, had a first close in April, and then had a final close in October.
Excellent. All right. In the next 5 minutes, we'll bounce around a few more things, but any other tips or advice you'd give maybe emerging fund managers, qualified investors, finding those true believers, understanding the unique product you're pitching to LPs? Anything else, any other kind of general nuggets of advice you'd give first-time fund managers? And if we've covered it all, that's okay too.
Yeah. Yeah, I don't think I have any other tips or advice to add.
That's fine. Okay, one question I did have: what's the Wisconsin startup scene like these days? Any just broad color strokes on that? What's happening
It is very small, but very enthusiastic. It is like it's interesting. I lived in Chicago before moving to San Francisco. So my like personal story, I grew up in a small town in Wisconsin, went to University of Wisconsin, moved to Chicago after college, and lived in Chicago from 2004 2005 to 2009, and then when I moved to San Francisco. And it reminds me, even though Chicago is a much larger city than Milwaukee, the startup scene kind of reminds me of how Chicago felt back in those days, where there was just this intense energy and just desire to make something happen and to be taken seriously. Frustration, sometimes infighting, and certainly not always perfect, but that's kind of how I feel right now in Wisconsin. It is still by any measure very small, but I've even just in the 2.5 years that I've lived in Wisconsin as an adult, have just noticed this real surge of energy and enthusiasm.
Cool, that's great. All right, I'll let you off the hook here, but if people want to learn more, it's character.vc. If startups are attracted to this message, do you prefer they work through the warm intro? Do you have a cold intake form? Like, how do people reach you, or where do you want to point them to?
One of the things that we decided was really important to us when we started was that we did not want to depend on warm intros. So we've set up all of our processes and tools to really accept and welcome cold outreach. So people are welcome to contact us on Twitter or LinkedIn. We're very findable. And then we do have a form on our website. Somebody the other day told me, a founder the other day told me that it was the best designed VC intake form he's ever seen. So
it better be. Yeah.
So yeah, go to character.vc. There's a big fat get in touch button where you can tell us about what you're working on. And we have our internal policy is to review everything immediately, and then get in touch and respond to every single inbound within a maximum of 2 weeks.
That's awesome. Do you find that you're attracting startups led by designers, or is it more people who, like me, like a business guy, I'm a finance guy, but I needed a design brain? Like, which one is sort of more the pull for you? Yeah.
I think it's both. I mean, we haven't noticed a clear pattern on that, but what we have noticed is that we attract founders who are really customer oriented, founders who really think about, what is the behavior shift I'm trying to enable for my customers? What am I trying to enable or empower them to do that they couldn't do before, or that was too hard for them to do before? And those people come from all different backgrounds, but that's kind of the common thread through the founders that reach out to us, which is great because that's exactly the kind of stuff that we love to work on.
Beautiful. All right, John, thank you so much. Character.vc, design sprint focused venture fund. Pretty cool. All right, well, we'll catch you after you've finished deploying this fund, and then we'll see what's next when you raise the $500 million fund to blow it out.
Yeah, look forward to chatting about that.
All right, thank you.
Thanks, Nathan.
Good work. Bye.